Two of the smartest people in finance are on a complete opposite side of this argument. One says Bitcoin will hit $1 million, the other says it will eventually go to zero. Both have serious, valid arguments. But while they are arguing, something is quietly happening in emerging markets, especially in Africa, that might make both predictions irrelevant. Let's start with the bull case. The argument that Bitcoin goes to $1 million. Cathy Wood, founder of ARK Invest, has maintained a $1 million Bitcoin price target for several years. Her argument, institutional adoption is just beginning. The ETF approvals open the gates. If Bitcoin captures even a fraction of the gold market as a store of value, gold is currently a $13 trillion market, and Bitcoin market cap will need to multiply several times over. Michael Saylor, who we talked about in the last episode, has made similar arguments. His thesis is that Bitcoin is the hardest money ever created, harder than gold, because gold supply increases every year as more is mined. Bitcoin supply increases at a mathematical decreasing rate until it stops entirely. The argument for zero, or at least for a severe long-term decline, comes from people like Peter Schiff, an economist and gold investor, and various central bankers. That their argument centers on few things. One, Bitcoin has no intrinsic value. It produces nothing. It generates no cash flow. Its price is entirely based on what someone else is willing to pay for it, which means it could theoretically go to zero if sentiment shifts. Two, regulatory risk. Governments, particularly in the US, China, and Europe, have the power to create environments that make Bitcoin extremely difficult to use. China has banned crypto mining and trading multiple times. Three, quantum computing. The cryptographic security that protects Bitcoin wallets, currently considered unbreakable, could theoretically be compromised by sufficiently powerful quantum computers in the future. These are real risks. Anyone telling you there is no risk in Bitcoin is either lying or is uninformed. But here is where I think the most interesting story is happening, and most of the global financial media completely ignores it. Africa, specifically sub Saharan Africa. The continent has about 1.4 billion people. A significant portion of those people are unbanked or underbanked. They have no access to traditional financial services, the infrastructure that Western countries take for granted, stable currency, functioning banking, reliable credit system is absent or unreliable in many parts of the continent. And mobile phone penetration is high and growing rapidly. This creates a perfect environment for crypto what? Adoption, not speculative adoption, functional adoption. People using Bitcoin, stable coins, and other crypto assets to solve real, immediate problems. Nigeria alone processes billions of dollars in annual remittance. Nigerians in the diaspora are sending money home through traditional channels like Western Union pays fees of 5 to 10% using stable coins on modern blockchain networks. That same transfer costs a fraction of a cent and settles in minutes. That is a real use case. This money staying in Nigerian families instead of going to what? Financial intermediaries. During the Naira's significant devaluation in 2023, when the official exchange rate collapsed and the parallel market diverged widely, Nigerians who held USDT or Bitcoin preserved their purchasing power. This isn't investment speculation. This is a financial survival. This is the original argument Satoshi made in 2008, playing out in real time in Lagos, Abuja, Kano, Port Harcourt, and you name it. Kenya, Ghana, South Africa, and Ethiopia are also seeing significant crypto adoption. Chain analysis Chain Analysis Global Crypto Adoption Index has consistently placed African countries in the top 20 globally, not because they are speculating, but because they are using crypto as a practical financial infrastructure. This is why I believe the or zero debate is slightly missing the point. The real question for the next decade isn't whether Bitcoin becomes digital gold for American institutional investors. The real question is whether crypto infrastructure becomes the financial system for the billion people that traditional finance never served. And if it does, the implication for wealth creation in Africa are staggering. Here's what I think young Africans specifically need to understand right now. First, custody. If your Bitcoin or crypto is on an exchange, you don't really own it. The FTX collapse proved this. The phrase in crypto, not your keys, not your coins, get a hardware wallet or understand self custody. This is not optional. Second, separate assets from speculation. Bitcoin and Ethereum are fundamentally different from meme coins and small altcoins. One is a 15-year-old asset with $1 trillion in market cap and institutional adoption. The other is a token someone created some months after with a meme picture. They are not the same thing. Third, dollar cost averaging. Trying to time the market, buying at the exact low, selling at the exact high has beaten almost every professional investor. A consistent strategy of buying at a fixed amount at regular intervals, regardless of price, has historically outperformed timing strategies in Bitcoin over any 4-year period in its history. The future of Bitcoin and the broader crypto market is not written yet. What we do know is that the infrastructure is being built at a pace that hasn't slowed down. The Ethereum network processes billions in transactions daily. DeFi, which is a decentralized finance, has created protocols that allow people to lend, borrow, and earn yield without a bank. Real world assets are beginning to be tokenized on blockchain, real estate, commodities, government bonds. The line between traditional finance and crypto finance is getting blurred. This 4 episode series was the foundation. We covered the origin, we covered the history, we covered the hidden game, and today we covered where this is all going. From here on this channel, we are going to go deeper into personal finance, into the African market, into the strategies and decisions that actually move the needle for people building wealth from the ground up. Because that is what this channel is about. Real education, real examples, and real outcome. See you in the next video. Do well to subscribe. Ciao.